A decline in the world's leading tech firms hit Wall Street stocks in the final stretch of an exceptional year. Despite the exuberance around the Trump trade and the fervor for AI, it has been a challenging year for generating profits across asset classes. During another session of low trading activity, which typically exacerbates fluctuations, the S&P 500 and the Nasdaq 100 slumped over 1%. All major sectors on Wall Street saw a decline on Friday. The tech caps were hit the most by the sell-off. This follows a vigorous surge in the group referred to as the Magnificent Seven. They contributed to almost 50% of the gains in the US stock benchmark for 2024. Kenny Polcari at a Stale Stone well said, I think Santa has already come. Have you seen the performance this year? Polcari added, it's Friday, next week is another holiday. Shortened week volumes will be light, moves will be exacerbated, exaggerated. Don't make any major investing decisions this week. The unpredictable Federal Reserve and persistent inflation have resulted in widespread cross-asset distress. The largest exchange-traded fund monitoring long-term treasuries, it saw major fluctuations in 2024. The ETF ultimately concluding with substantial losses. Commodities fluctuated in response to the aspirations around Chinese stimulus measures. And well, for more on this, we are now being joined by Mithali Nicole. She's an economist from New Delhi. Welcome to WION, Mithali.
Thank you. Thank you for having me. Good morning.
Good morning. First up, should one read this week's market moves as cues for early 2025 trading?
No, so absolutely. I mean, I think thank you so much for getting me into this discussion. I think what is happening in the last week this year and the first week next year, of course, will be interrelated. And there's a lot of, this year has been really unprecedented in terms of how we are moving into next year's markets. There's a lot of uncertainty around a number of, external factors in a way that has not played out in any other year, in recent history. So when we were going into 2023, the biggest uncertainty, into 2024, at the end of 2023, the biggest uncertainty people had was around, say, the US election. There was an uncertainty around a number of elections that were happening across the world. It was called the election year. But no one really anticipated the number of flare-ups and global skirmishes that would actually take place. And now, as we go into 2025, a year later, this is the top priority for investors. How do you park your funds and diversify your portfolios in such a way that you can extract the maximum returns in light of reducing interest rates, particularly in the US, but might be seen in other European economies as well, and also in light of the global skirmishes that seem to be flaring up in various regions. So these are, I believe, the dominant trends that we'll start seeing going into 2025, lifting off of 2024.
Right, Mithali also talked to us about how stocks have faltered in the final stretch of an exceptional year. What is your take for 2025?
So I think equity markets this year in 2024 have had a record year in some countries. I mean, countries like the US have seen a massive rally through the year. We haven't seen, major stocks tumbling. I mean, there are one or two, but overall, when we look at a high level performance, the US stock market's really dominating over the stock markets across the rest of the world. We have also seen the London Stock Exchange really correcting in certain, in certain quarters, and we've started seeing that, the LSE is really also trying to diversify the stocks that are listed on its exchange so that it can protect against, cyclical peaks and troughs, particularly in the finance industry. And closer home in India, we definitely see the performance of the Bombay Stock Exchange and Nifty coming up on top. Even, I mean, despite the fact that there were some very, very sharp troughs, especially during the election season and more recently when the FDI, flight of capital took place. So I think all the indices overall doing very well, and we expect that in 2025 with more diversification, that growth of the indices and the equity raising ability for small investors will really be the dominant trend of 2025.
Right. I also want to seek your assessment on the fact that what will Trump's tariff moves mean for India and China?
So, I mean, this is really the one uncertainty. This is really the one, sort of trend that no one is able to fully decode today, because we don't really fully know to what extent this is a threat mechanism. So, in international economics, we have a term called competitive advantage, right? And here, I think Trump is trying to signal that he could put an end to China's competitive advantage in global markets, particularly accessing US consumers through this tariff mechanism. Now, the only question is, how far is this a threat which is credible? And how far is it a threat which he just wants to use as a threat to signal to the Chinese that, oh, please come in, trade on our terms, and we actually won't impose the tariffs. So, really, today the question is the level of credibility of this threat. And the second question really then becomes, if the Trump tariffs go through, then which commodities are likely to be most impacted? In my view, it would be iron and steel. It would be, large bulk goods, as we call them, rather than just consumer goods, because putting tariffs on final consumer goods would hurt the US consumer more than anyone else. And it would actually increase inflation in the
Right.
US economy considerably.
Right, Mitali. Thank you so much for joining us on the show with your insights.
Thank you. Thank you for having me.